Hello, wow. My name is Onyenze Onyekachikinsi. I'm an accountant, I'm a teacher, I'm a speaker, a writer, and also a business strategist. Okay, so this video is aimed at giving solution to past wire questions on accounting. Okay, so we have various series on this. We have on accounting, we have on economics, we have in mathematics. Okay, so if you want to get on any of these subjects, you can call that number showing on your screen. Okay, and also this video is not mainly for those writing WAEC only, because it's based on accounting principles that can be applied in any accounting question. Okay, so if you're in year one, or you have someone in year one or someone in higher institution studying accounting, this video is also beneficial to them. Okay, because it is accounting, and they also do that in higher institution. So it's not just limited to only those offering those writing WAEC as per se. If you have those in SS1, SS2, and also those in higher institution, this video will be beneficial to them. Okay, so you should share this video, give them the CD plate, and also other series as regards mathematics, economics, and other calculation courses. You can make order for it by calling that number shown on your screen. And also we have a YouTube channel where we teach accounting, mathematics, statistics, and other calculation subjects. So you go to your YouTube, you can type in Google, check there, you see The King's Tutor. The King's Tutor showing on your screen. See The King's Tutor. Click there, you will see our videos. You can subscribe to our channel and follow us so that you can learn accounting and other calculation courses. Okay, so we want to look at the past WAEC question 2020 on accounting. Now, in WAEC question in accounting, it consists of two sections. The section A is the theoretical part, while the section B is the practical part, in which students will be asked on how to solve a particular question, to practice, okay, to solve down, not just to write, but to show their practical knowledge in accounting. Okay, so let's look at the first question there in section B. You can see that in your screen. The question said, the following transactions were extracted from the books of all these enterprises for the year ended 31st December 2018. 1. Cash received from debtors, 100,000 Ghana cedis. II. Cash paid to suppliers, 70,000 Ghana cedis. III. Expenses paid during the year were rent, 2,500 Ghana cedis. General expenses, 1,800. The next one, a cash of 5,200 Ghana cedis was withdrawn by the proprietor for personal use. The next one, fixed asset valued at 8,000 Ghana cedis on 31st December 2017 were depreciated at 10% per annum. Additional information, we have trade debtors 31st December and 31st December 2018 and 2017. We have 11,000, 13,200. We have for trade creditors 4,065. We have rent owing. We have cash. We have stock. Now the question is, you are required to prepare A, statement of affairs as at 1st January 2018. B, cash book. And C, trading profits and loss account for the year ended 1st December 2018. Okay, so we want to solve the solution to this question. Now the first thing you should do if you are solving such a thing like this, the first thing they ask you to do is statement of affairs as at 1st January 2018. Now in accounting, date is very important. The date is very important. Now they say statement of affairs. You ask yourself, what is statement of affairs? Okay, you want to get general knowledge of this. Check in that my YouTube video I told you about the King's Tutor. Okay, this video is just for the solution. Now, statement of affairs is an abridged balance sheet. Abridged, a summarized balance sheet. It is prepared to either get an opening capital or a closing capital. Okay, so the items at the beginning, the balancing figure will give the opening capital, while this at the end it will give the closing capital. But now, if you check there, it says statement of affairs as at 1st January 2018. So it's meant to get opening capital. So we use the item. You check, see the item and the additional information there that is written 31st December 2017. So we use this item there to get the capital. Okay? Because the question there is required to get capital. Now let's sum. Now the first thing we do, now we write the name of the owner, which is all these enterprises. Okay? Now the next one is our statement of affairs. Statement of affairs. As at, he said is what? 1st January 2018. Okay? Now, I said earlier on, you will use those items as at 31st December 2017. Okay, those are the items you use to get this. And I told you it is a summarized balance sheet, the same way you prepare balance sheet. But the balancing figure will not be opening capital in which they are asking us to find. Okay, so you check there. Now, if it is a balance sheet, at the right hand side, we have what? Fixed assets. And we also have our current assets. Okay, so from this now if you check in the question, reading down from the you check V. They said fixed asset value at 8,000 on 31st December 2017. It means this item is supposed to belong here. Okay, because we are using those items as at 31st December 2017. Okay, so our fixed asset from the question there, it said fixed asset is what? 8,000. Now we have Ghana cedis as the naira value, as the currency value. Okay, fixed asset 8,000. Now you come down there under additional information, you will see they say trade debtors. Okay, trade debtors. Trade debtors is the current asset. So we'll write it here as trade debtors. How much is it? It is 11,000. The other one is trade creditor. Trade creditor is the current liability. So we have current liability. So we have trade creditors. Trade creditors, how much is it? It is what? 4,000. So we're using those items at the 31st December 2017. The next one is rent owing. There is no value there, so it will not come here. The next one is cash. Cash is a current asset, so it appears under here. So how much is it? You will see there as 12,100. While the next one is stock. We have stock. The current asset also 15,900. Okay, so those are the items as of 31st December 2017. So you add up all this. I will also add up all this. So you see, the balancing figure is the capital. That is why the statement of affairs is prepared. Okay, so if you add up all this with my calculator, I will have 47,000. And for a balance sheet, they are supposed to have the same one, balance, 47,000. So 47,000 minus 4,000 will give us what the capital should be, and that should be 43,000. Okay, so you see the statement of affairs is prepared because of what? Capital. So with that, we have answered the first question, the action, which is what? The statement of affairs. Okay, now the next one is the cash book. We already know what is cash book. I said it. The cash book is a book that is prepared to record cash transactions. Okay, so in all the questions given, we are giving cash transactions. So what do we do? So we have the cash book. The actions to prepare a cash book. So from this now, in the cash book, if you read the question there, the cash book, it said cash received from debtors. That was the first item. But before that, let's check in that 31st December 2017 if we have cash that was brought forward. Okay, remember this is for 1st January 2018, but for the cash book it is supposed to be paid for the end of the year, which is for 31st December. Okay, so if you check there, we already have cash that was brought from first, so it should be balance brought forward. Okay, so that is balance brought forward of the cash as 12,100. That was brought from the previous year, from 31st December 2017. Okay, so the next item, let's look at those items they gave to us in the question. From I, it's a cash received from 3 debtors. So if they receive cash from 3 debtors, it means they are receiving the money. So it means we have to debit the amount. Debtors as what? 100,000 Ghana cedis. 100,000 Ghana cedis. Okay? So the next one, it said cash paid to supplier, 72,000 Ghana cedis. They say cash paid, it means the money is going out. So we credit the giver, which is a given account. So we write here, supplier. How much is it? 72,000 Ghana cedis. Okay. The next one, they said expenses paid during the year were rent, 2,500 Ghana cedis, and general expenses as 1,800 Ghana cedis. So right here, our rent as 2,500 because they are paying, so the money goes out. And the next one is general expenses. General expenses as what? 1,800 Ghana cedis. The next one, they said a cash of 2,200 Ghana cedis was withdrawn by the proprietor for personal use. So any amount that was withdrawn by the proprietor is called drawings. And drawings, you credit the cash book. So right there as what? Drawings. So the amount is what? 5,200. Okay? So I think that is the only cash item there. There in the question, you will not see any other cash item. Okay? So apart from 31st December 2018, we have cash there at 31st December 2018. 3,600. It means that is the balance they have in hand, the cash in hand as at 31st December. So that balance carried down. So the amount is balance carried down, 30,800. So if you add them together, the totality will give us 112,100. And this also gives us 112,100. So it balances on itself. Okay, so that is the cash book they asked us to want to prepare. Now the last one, they say trading profits and loss account for the year ended 31st December 2018. So it means we are going to use this item to prepare what? A trading profit or loss account. Okay, now preparing this now, we have to do an adjustment. Now the first adjustment we have to do, the first thing is depreciation. Now depreciation, if you check there, they said fixed asset valued at 8,000 at 31st December 2017, you are to be depreciated at 10% per annum. Okay, so depreciation of fixed asset is 10%. That is 10 over 100 times 8,000. It gives us 800. That's the depreciation. Okay. Another one is we have rent there. So we have rent. We have to do the adjustment for rent. Okay. Now, if you check there, we have rent that was paid in the cash book here. Look at the amount, 25. So, right, the amount paid is 25. Okay. Now, to do the adjustment, now they said rent owing from the question. Owing means accrued, and in accounting, accrued for that current year is supposed to be added to the previous amount that was already paid to know the actual amount of what? Rent. So the rent owing from the question there, you see it is 500. So 25 plus owing. So we added the owing. So it will give us what? 3,000. That is the rent. Okay? Because all these items we posted to the trading portals and is supposed to be was adjusted. Now another item that needed, if you notice in the question from up to down, we were not giving sales. We were not giving purchases. Okay? We were not giving sales. We were not giving what? Purchases. So it means that we have to what? Get that. How do we get sales and purchases? We get that using what? Our control account. Check control account in my YouTube channel to see everything about. So we want to use the sales ledger and the purchase ledger control account to get our sales and purchases. We use those items that belongs to debtors and credit together. So in this now, what we'll do is to use to prepare our sales ledger control account. So sales ledger control account and the purchases ledger control account. So the sales ledger is used to get the sales, while the purchase ledger will be used to get the purchases. Okay. So in this now, if you check there, we have the sales, that is debtors amount for 31st December 2017. So anything that concerns debtors comes here. So all debtors have debit balance. So the balance that was brought for the three debtors, 11,000, will be treated as the balance brought forward as what? 11,000. Okay? While the next one, it said debtors paid them 100,000 cash. So in this now, it means the corresponding entry comes here. It means cash 100,000 was paid by the debtor. So it is going out. Why? If you check the trade debtors in the question, 31st December 2018, 13,200 for trade debtors. That is the balance carried down. So it will be written here, balance carried down for the other as 13,200. 13,200. Okay? So if we add up this, we will have 113,113,200. And this two is supposed to balance. So the balancing figure here is what we call the credit sale. That is why this is prepared. The credit sale. So we have 11. Okay. The balancing figure 1,200 minus 11,000. It will give us 1. Okay. So that is it that will be needed to be posted to the trading company for the same thing in this ledger. So when that concerns creditors, okay. Now in this now, if you check in the question, you'll see trade creditors. Okay. Now all creditors have credit balance. Okay. So we'll post there the balance brought forward for that 31st December 2017. The balance brought forward was what? 4,000. So the balance brought forward is 4,000. Okay. So we're going to check other things that relate to the creditor. Now in this now, if we check there, they say they paid cash to supplier. Check the question there, and if they paid to supplier, it means it's still related to creditor. Supplier is still creditor. So the money is being received by them. So their account is 72,000. Okay. And the other one, check in the 31st December 2018. You see trade creditor, the balancing figure at the right there. The amount there is the balance carried down because it's the amount at the end. Okay. And the amount there is 6,500. So 6,500. When you add together, we're having 78,500. You check there if the other things related to creditors. There is none. If there is none, so we is supposed to balance at 78,500. Okay. So the balancing figure will now be the credit purchases. And the credit purchases, I deduct this from this, it will now give us 74,500. So that is how to get that. So with this now, we can now prepare our trading profit or loss account. Okay, we have our sales and what purchases. Without this, we cannot prepare trading profit or loss account. Okay, because it is needed. We are not given sales and purchases. Okay, now let's prepare trading profit. Now let's solve the trading profit or loss account. Okay, that's the last question they asked us to find. Now, if you check there, the first thing in our trading profit or loss account is our opening stock. If you check there, you will see in the question stock 31st December 2017 as 15,900 and 31st December 2018 as 17,000. The first one is the opening stock. So we'll have our opening stock as the amount there is 15,000 or 900. After opening stock is always our what? Our purchases. So we'll now take this value. That's our purchases. Without that, you cannot get purchases. So I have 74,500. So if you add this in my calculator, I'll have 90,400. Okay. Now, the next thing you should do, there is no return outwards in this question. So we should just less our closing stock. So if we less closing stock, the closing stock is the one at the end. The closing stock now will be 17,000. So if you deduct this, we have 73,400. Okay. Now at our credit side will be our sales, and we'll take this sales 102,200. Okay. So to get this is now our cost of goods sold. Now to get our gross profit. Our gross profit is the same. There is no return inward. So if not, we would have deducted it. So our sales minus cost of goods sold, this is the cost of goods sold, will give us our gross profit. So 102,200 minus 73,400 will give us 28,800. Okay, so that is gross profit carried out. So if you add this, it will give you 103,200, and this will also give you 103,200. Okay, so from this now we'll now check. The next thing is our expenses. Now, gross profit carried down will be drawn down here. So we have gross profit drawn down as 28,800. Now let's check the question to see if there are expenses. Now the first expenses we'll see there is rent. And take note, look at the date. We are not dealing with 2017, but 2018. That was what they asked us to be fair. That's why I said date is very significant in accounting. So we are taking rent. Remember, we did adjustment for rent. Look at the adjustment we did. That's 3,000. So that is what we posted here as what? 3,000. The next one is our general expenses. General expenses. Now the general expenses, if you check in the question up there, it said expenses that was paid. So our general expenses there is 1,800 naira. Okay, 1,800 naira. Because all the items, they say the following transactions was for 31st December. So the next item we are looking for depreciation. Depreciation. Okay, depreciation of fixed assets and expenses. So we have depreciation as 800. So we'll check if there is any other. So if there is none, so we'll go ahead to get our net profit. So we'll now have our net profit here. So the net profit is gross profit minus all the expenses. So our total here is 28,800. Okay, so if you add this and deduct from 28,800, we'll have our net profit, which is 23,200. So if you add that, you get 28,800. So that is the trading profit or loss account. So that is the first question for this WAEC 2020 first question, question 5. Now, just
the second question for the WAEC 2020 past questions. The second one said, the books of Omiye Social Club, shown on your screen, show the following information for the year ended 31st December 2015. Okay, now they gave us the receipt and payment account. On the debit side, you will see a balance that was brought forward: 3,000 subscriptions, 130 proceeds from concerts, interest on deposit, income from dance. And on the credit side, you will see salaries, maintenance, stationery, postage, dancing expenses, and general expenses. Okay. Now, afterwards, they said the balance as at 1st January 2015 were as follows. Now, they gave us accumulated fund, 266,000, gave us bank deposit, clubhouse, furniture and fittings. Okay. So, the next one, they said additional information. Outstanding as at 31st December 2015. Stationery, they said it's 400, general expenses, 12. The next one, salaries of 10,600 paid. During including 1,000 owed since 2014. Now they say they appreciate clubhouse by 10%. You are required to prepare income and expenditure accounts for the year ended 31st December 2015 and balance sheet as at that date. Okay. Now this question is from account for non-profit making organization. If you want to get an in-depth understanding on this, check in my YouTube channel at the King's Tutor in the YouTube channel. Check in the playlist, you will see account for non-profits. Okay, so let's just solve this. Now, we'll start by writing the name of the owner, which is Omiye Social Club. Okay, Omiye Social Club. Now, the first thing I always advise students to do is to do the adjustment first. Okay, now adjustment, check in the additional information. They said, December 2015, the first one was stationary. Okay, so we'll have adjustment. The first one, that's 1A, we have stationary. Okay, now they said it's outstanding 400. You do check in the receipt and payment if they paid any stationary. Okay. So it was paid at credit side, the amount than 200, while the outstanding in the additional information, we have to add it. Outstanding accrued are being added. So say add outstanding 400. So 1, 2 plus this will give us 1,006. Now this is the amount that will go to income and expenditure, while this will go to balance sheet events. Okay. Why the next one, B, in the question, general expenses also outstanding. So I have general expenses. So you check there, you have amounts paid. Check in receipt and payment, if they pay at general expenses. It said it's 5,400. Then you add outstanding. Outstanding in the question is 1,200. So I have 6,600. So this one should go to income and expenditure, while this should go to the balance sheet. If there is. Now the next one is salaries. Salaries. Now they say the salary of 10,600 paid, including 1,000 owed since 2014. Okay, so it means 1,000 is owed. That is accrued salary. It's just 1,000. Why I? They say we should depreciate. That's depreciation. Depreciate the clubhouse by 10%. That's 10% on the cost. And the cost is there. They said the cost is 160,000. So 10% on this will give us 16,000. Why also we will depreciate furniture and fitting as F and F on 15%. And the cost of the asset is 24,000. So 15% of 24,000 will give us 3,600. Okay, I think that is all for the adjustment. Okay, so the next thing is to move into the solution proper. Okay, so the first thing they ask us to prepare is income and expenditure. So we say income and expenditure for the year. What year was given? 31st December 2015. Now, the income and expenditure is the same thing as profit or loss for a profit venture. Okay, so the same way. So at the debit side here will be our expenditure, while the credit side is what? The income or income. So what do we post here? Check the receipt and payment in the question given. Every item at the debit side of the receipt is what they receive. That is their income, apart from the balance brought forward. Okay. While at the credit side of the payments, receipt and payments, the payment are expenditure, excluding payments made for fixed assets. They are not expenditure. Okay. So we'll write here all items in the payment, excluding payment made for fixed assets. While the income is what they receive in the receipt and payment account. It will be credited here apart from the what? The balance brought forward. So we'll just take it like that from there. So we have subscription. Yeah, subscription 130,000. The next one, we have proceeds from concert. Proceeds from concert. We have 9,000. The next one, we have interest on deposit. Interest on deposit. We have 2,400. And the next one, we have income from dance. Income from dance. We have 7,200. Okay, that's all. So move to the expenditure side. You see that in the payment made. So the first thing we have there is salaries. Okay. So we should be careful. Check if what expenditure you want to post, if there was adjustment. Okay. So salaries, they said they've already paid for 10,600. So that's expenditure. The next one is maintenance. Maintenance. Maintenance, there was no adjustment, so we have 13,000. The next one is stationery. Stationery is 1,600. And the next one, okay, stationery 1,600. Look at it. There was adjustment that was done, so we don't post the amounts that is there since there was adjustment. Okay. So the next one is postage. We'll also check there was no adjustment for postage. So we'll post the one in the receipt and payments there. That is how much? 4,000. While the next one is dancing expenses. Is there any no adjustment for that here? So write dancing expenses. How much is it? Okay, sorry. This postage is 600. Postage is 600. While the dancing expenses is 4,000. Okay. While the next one is our general expenditure or expenses. There was adjustment made. Okay. Look at it. That's 60. So that's all. 6,600. Okay. While our depreciation. The first one is for clubhouse. Clubhouse, 16,000. While the other one is for furniture and fittings, 3,600. Okay, so I think that is the only expenditure made. So these are the items that comes under the income and expenditure. So we're going to add them up. The balancing figure can either be surplus or deficit. Now, it is surplus when our income is more than expenditure. It is deficit if our expenditure is more than what? Income. So, balancing our total figure for the income column will give us 148,600, okay, which is bigger than what we have here. So we have that surplus because the income is more than the expenditure when we calculate this. So our surplus will now be the balancing figure, okay. So the balancing figure from there is 92,600. So what you add, it gives you 148,600. So that's our income and expenditure. Okay, quickly we move to the balance sheet. That's the second question. So write balance sheet as at 31st December 2015. Balance sheet. Okay, and the balance sheet is the same way. At the right hand side, we have our fixed assets. We have our cost, depreciation, net book value. So the fixed asset we have in the question is just clubhouse, and furniture and fittings. And the clubhouse, the cost from the question was given as 160,000. While the furniture and fittings is 24,000. So there was depreciation for clubhouse. So we're going to less it 16,000. While for furniture and fitting is 3,600. So cost minus depreciation will give you net book value. So the value for our net book value will be 144,000. While for furniture and fitting, cost minus depreciation, giving us our net book value, which is 20,400. Okay, so that's the only fixed cost or fixed asset. So add this to this plus this will give us 184,000. We have closed this. So 16,000 plus 36 will give us 19,600. So 184,000 minus this will give us what we have in 164,400. Which is also when you add this, you have this. So this is what we start adding. So the other items that might come here is the current assets. Now the items in the current asset, now if you check in the receipt and payment, the balance carried down there, okay? If you check in the question, the receipt and payment, the balance carried down is cash in hand, because that's the cash remaining, okay? And the amount there is, so that's our cash in hand, and the cash is the current asset. So the amount there is 116,800, okay? Also in the question, if you check there, you see bank deposit. So it means the amount they have in their bank account. So the amount here is 80,000. So when you add this together, you have 196,800. Okay? So if you add 196,800 to this, what we have there is 361,200. That's what is at our credit side. So the next one is to what's at the left hand side. Now if it's for profit venture, what will be here is the capital. But in the non-profit is what we call accumulated fund. And it was given in the question. So the amount there is 266,000. Okay? And the next one, if it was for profit, we'll say add net profit. But for this one is what? Add surplus. Which is 92,600. And add it together, you have 358,600. Now there is no drawings, so we'll go to current liabilities. Now current liabilities, now if you check in the question, the current liabilities we'll have are those items under additional information. One of them is stationery. Remember in the additional information they said outstanding, it means it is accrued expenses. Okay? So it is this 400. Remember, we said it's coming to balance sheet, so it will be under the current liability. So we'll add stationary outstanding, which is what? 400. The next one is the general expenses, also outstanding. So I have general expenses outstanding. It is 1,200. While the next one is accrued salary. In the question they said, look at it, they said the salary of 10,000 paid including 1,000 owed. So it is salary owed 1,000. So if we add it together, we have 2,600. I think that's the current liabilities here. So if you add 2,600 to this, you have the same value as 361,200. So that's the balance sheet. It balanced automatically. Okay? So that's the other question. Now let's look at the third question in this. The third question. Now we do that while writing not on the board, but writing probably in our notes book to see how it's being done in that direction. Okay, let's solve the next question, question 7. It says the following balances were extracted from the books of Abubakar local government for the year ended 31st December 2019. We have construction of an office block, renovation of classroom blocks, court fine, building permits, rehabilitation of street lights, woodies and ancillary medical services, provision of pipe-borne water, interest on investment, lorry parks, all that to maintenance of motor vehicle. Now they say you are required to prepare for the year ended 31st December statement of recurrence, statement of capital, and statement of revenue. Now this question relates to the public sector accounting. So if you want to have an in-depth knowledge on that, check my YouTube channel at the King's Tutor. Okay, so let's solve this now. Okay, now solving this question, we'll have something like this. Okay, for the three accounts, they are recurrent, capital, and revenue. Now, what is recurrent expenditure? These are expenditure that reoccurs frequently. Okay, what you do frequently, the expenditure they incurred that are frequent. While capital expenditure are expenditure that are most time once in a while. That are mostly once in a while. While the revenue are what they receive. Okay, so we're going to post them as they occur. Now the first one from the question here, it said construction of an office block. Now construction of an office block is done once in a while, so it is a capital expenditure. So it will be recorded here. Have construction of an office block. 3,850,000. Okay, the next one is a renovation of classroom block. Renovation is done frequently after building of. So we have renovation of classroom blocks. So I have, what's the amount? 1,065,000. Okay. The next one, say court fines. Court fines is a revenue to them. Okay. So have here court fines. How much is it? 90,000. The next one, say building permit. They are permitted building. It's also a revenue. So have building permits. How much is it? 650,000. Okay. The next one said rehabilitation of street lights. So rehabilitation of street light means it can be done as also known as maintenance. or to put it to work, so it can be done frequently after they've mounted the street light. What is the amount? 470, 500. The next one said wages and salary. So they pay their workers probably monthly, so it's a recurrent expenditure. So I have wages and salaries. How much is it? 7,880,450. The next one is medical services. They go for medical checkup and it is done frequently, so it's a recurrent. So we have medical services. How much is it? 1,334,650. Okay, the next one, provision of pipe-borne water. Provision of pipe-borne water can be done once in a while. Okay, it's not something that is done frequently. So 2,500,000. So it's a capital expenditure. So we have provision of pipe-borne water, 2,500,000. Okay, the next one is interest on investment. So they have an investment, so the interest they get from that is an income for the local government. So it is a revenue, okay, which will come under the statement of revenue as interest on investment. How much is it? Interest on investment is 250,000. Okay, that is it here. 250,000. The next one is lorry park levies. Lorry park levies. Okay. So the lorry park levies is 380,000. So it's a revenue to them also. So we have lorry park levies. How much is it? 380,000. The next one is market tolls. It's also a revenue to them. So have market tolls. How much is it? Market tolls is 560,000. Okay, so 560,000. And the next one is property rates. Property rate is also an income to them. So we have property rates, which is 1,200,000. Next one is general administration, 637. And general administration is a recurrent expenditure. So it should be here. General administration. Okay, so it is 630,700. The next one is motor vehicle procured. When you procure motor vehicle, it is once in a while. So it's capital expenditure. So I have motor vehicle procured. How much is it? 6,653,000. thousand. Okay. So the next one, extension of office building, 9 feet out. Extension of office building is also done once in a while. So extension of office building, which is 950,000. Okay. The next one is grants from donor agencies, which is 2 million. The grant is a revenue to them. They receive grant. Okay. So we have grants from donor agencies. $2 million. Okay. The next one is royalties. Royalties is 4,500,000. It's also a revenue to them. So we have royalties. $4,500,000. Next one is subvention from central/federal government, 20 million. So it means they receive money from the federal government. It's a revenue. So subvention. So 20 million. Okay. Next one is donation to charity, 250,000. The donation might be done regular. Donations to charity home, 250,000. Okay. So the next one, entertainment permit, 70,000. It's a revenue to them because they permitted entertainment, so they are receiving revenue. So we have entertainment permit. How much is it? 200,000. Okay. So entertainment permit is 70,000, not 200,000. Okay, so we have 70,000. The next one is staff training. It's an expenditure they might do regular. So staff training. So we have staff training. Now the staff training is how much? 550,000. The next one is entertainment expenses, 200,000. Okay, so it's a regular. So we have entertainment expenses, 200,000. The next one, marriage registration fees, 80,000. So they received money. Okay, so it should be marriage registration fees. How much is it? Is 80,000. The next one allowance to community leaders, 370,800. So allowance to community leaders, 370,800. So the next one, birth certificate fees, is an income to them. So we have birth certificate fees. How much is it? It's 160,000. While the last one is maintenance of motor vehicle, 650,000. Maintenance can be done regularly, so it is a recurrent. So maintenance of motor vehicle, which is 650,000. Okay, that's all. So what do? We add it up. So if we add this, we're going to also add this and also add the final one. So if you add this with my calculator, it's giving me $13,402,100, because they said D. While the second one is also giving me that's capital expenditure, 13,953,000. While our revenue, as statement of revenue, is giving me 29,940,000. So that is it. So look at it. That's a question I was asked regarding to this. This is the recurrent expenditure. It's the capital expenditure, and this is the revenue. Welcome to this other question. Okay, let's get into it. But before we do that, don't forget that we have videos also in different series: economics, mathematics, and other calculation courses that are beneficial to you. Or any topic that you're finding difficult that you want us to treat, just call that number showing on your screen. Okay, and also don't forget we have a YouTube channel. Type the King's Tutor in the YouTube. You will see other videos there. You can check. Ensure you subscribe so you see new video. It is free. Just click on the subscribe button. You get new videos on accounting and other calculation courses. Okay, and also we are. I told you before now that I'm a speaker. I am an academic coach, educational consultant. Okay, so whenever you're having difficulties in education and whatever subject, you can reach out to us. And also, any event you want us to speak or talk on any topic, you can also relate to us. Okay, now let's continue. The other question. Yalawa Stores Limited has 2 departments. The following balances were taken from each book as at 31st December 2017. Purchases, Department A, Department B, the figure is there, rent and rates, commission, insurance, sales, Department A and Department B, discount received, advertising, salaries and wages, depreciation, administration and general expenses, opening stock, Department A, Department B, closing stock. And also we have additional information. Expenses are to be apportioned to the department as follows. Look at the additional information. Commission on the basis of sales. Salaries and wages 3:2 for Department A and B. Third one, discount received to 10% of purchases, and other expenses are to be apportioned equally. To have an in-depth understanding on this is departmental account. Check that in my YouTube video also to see that. And also, lest I forget, I have a book called Hidden Principles and Secrets in Accounting. It's a wonderful book that helps you in the adjustment to know some different secrets in accounting that is not meant opened in different accounting book. You will see that there. Okay, just call or send us an email at onyenzolekachikinsley@gmail.com, or you check in our Facebook, or you call us at that number showing on your screen. Okay, if you need a book, very good book that will help you in adjustment on how to treat all these other items. Okay, let's move. So they said we should just prepare the departmental trading profit and loss account for the year ended. Departmental trading profit and loss account. Okay, so departmental trading profit and loss account is the same thing as a trading profit and loss account, just that this one have a department column. It has different column for different department. Okay, so to do that, we have to first of all apportion. They say expenses are to be apportioned, so let's treat that first. The apportionment of the expenses benefits. So the fund, additional. So the name of the owner, Yalawa Stores. Okay, Yalawa Stores. So the first one is for commission. They said we should apportion it on the basis of what? Sales. On the basis of sales. So what does that mean? It means that the expenses they made on commission is as regards the amount of sales they have. So what do? We have to check there in the question if sales was given for departments A and B, get the total sales and use it to apportion the expenses on commission. Okay, so in that now we'll have our sales for department A. You check the department A, our sales is 1,500,000. 1,500,000. Let's add it to department B sales, 1,250,000. So if you add them together, you will have 2,750,000. That's the total amount. Okay, so our commission based on sales for department A. Our commission, the amount for expenses there is 55,000. Okay, so since they said on the basis of sales, okay, so our commission for department A, for sales department A amount is 1,500,000. So it will now be 1,500,000 divided by the total, which is 2,750,000, times the amount of commission, which is 55,000 over 1. Okay, so that's for department A. And the amount, once you do it, will give us 30,000. Then the next one for department B. And the reason we are doing this is because commission was just given plainly. It wasn't shared to the two departments. So they want to apportion that commission expenses as regards what the sales made. Okay, so this sales was for department A, department B. So we add the two to get the total figure. So this is the amount for the total commission. So for department A, 1,500,000 divided by total times the commission amount. So this is what is apportioned, what is to be paid, or what is to be removed from department A. So department B also will now be 1,250,000 over the total times 55,000, which is the commission amount. So we'll have here 25,000. So that's for commission department A. Look at the amount department B. So when you get to this point, if you add these two, you should have the total amount of that expenditure. This is just to divide it to the different departments. So that's for commission. The next one is for salaries. Salaries and wages. Salaries and wages. They said is to 3:2 for department A and what? B. 3:2. 3:2 means for department A is 3, department B is what? 2. So we have to add it. 3 plus 2 will give us what? 5. So that's the total. So what do? Check in the expenses. Check the amount for salaries and wages is 250,000. So we'll just say for department A, it is 3 over the total, which is what? 5 times 250,000, which is the amount for the salary. So if you do that, you have 150,000 for department B. Department B, we have 2 over 5 times 250,000. We have 100,000. Okay, so that is for department B. The next one, III, we have discount received. Discount received, they said it should be 10% of what? Purchases. 10% of purchases. It means that the purchases figure, get 10% of it, then it should be apportioned as regards of discount received. Okay, so what should we do here? We are going to first of all get 10% of the purchases figure. So, because they said it was 10% from the question. Okay, so when I say this is the purchases figure, now I get 10%, and the purchases amount is 720,000 for department A. So we'll have 72,000 here. This is for department A. And also we'll have 10% of 520,000 for department B, which will give us 52,000. This is for what? Department B. So this is the amount we use now to what? Apportion the discount received. So that's the discount received for department A. If you check there in the question, the discount received, the amount there is 124,000. So if we add this to 72 plus 52,000, it will give us 124,000. Okay, so for department A now, 10% on this, it will now be 72,000 divided by the total, 124,000, times the amount of discount received, which is still 124,000 over 1. So if this cancels this, so what we have is just what? 72,000 for department A. The same way for department B. Department B has 52,000. 52,000 over 124,000 times 124,000, which is the amount of discount received, over 1. So this cancel this, we have what? 52,000. So this is all you're supposed to department A and B for discount received. Okay? So the next one is, they said other expenses are to be apportioned equally. So start from the question there. What are the other expenses apart from the one that have special apportionment that was given, like commission, salaries and wages, that have special apportionment? So from the question there, the first expenses is rent and rates. They said it should be apportioned equally. So it means half rent and rates. So it means for department A, it is half. That is 1/2 times. What is the amount of rent and rates paid? It is 50,000. So half of 50,000 is 25,000. For department B, the same way, half of 50,000 is still what? 25,000. So we move to the other one. Insurance, commission and taken care of. So we move to insurance because they say other expenses. So insurance, the same way for department A, they said all these other ones are equal. It's half how much of the insurance was paid? 5,000. So half of 5,000 is 25. So the same thing, department B, half of 5,000 is 25. Okay, so the next one is, the next expenses there is advertising. So we have advertising for department A. For department A, we have half. The amount paid is 20,000. So half of 20,000 is what? 10,000. For department B, that same half of 20,000 is what? 10,000. So if we check the other expenses there is depreciation. So we have depreciation for department A, because it's equal half times. The depreciation amount there is 35,000. Half of 35,000 will give us 17,500 for department B. Half of 35,000 will give us same 17,500. Okay, so the next one, admin and general expenses. So admin and general expenses. So for department A, we have half. So what is the amount paid? 50,000. So half of 50,000 will give us 5,000. So also for department B, half of 50,000 will give us 25,000. Okay, so I think that is the expenses. So we've taken care of all the expenses, the adjustment. The first one was commission. They said on the basis of sales. So we treated it on the basis of sales. This is the sales amount for department A and B, the total. So this is the commission amount. So department A amount over the total times the commission for department A, this for department B. The size and wages, they give us ratio 3:2. So discount received, they say 10% of purchases. So this is the purchases amount. So we collected 10%. So it is this amount we use for discount received. So it is 72,000 over the total times discount received amount. So this is the discount received for department A and department B. So they said other expenditure apart from this one. So these are the other expenses apart from this. Okay. So take cognizance of this. You can write it down. You can write the figure down because we want to clean here and solve what was asked. They said they prepare departmental trading profit and loss account. That's what we want to do. You can write this down now. Commission department A is the amount. Salaries department A and department B. That's the amount. Discount received department A and B. That's the amount. So that while we are treating it, you can also follow up. Okay. So write the amount that you can pause the video and write this out. Okay. So let's treat that now. Okay. Now let's prepare the departmental trading profit and loss account. I told you earlier on, it's the same thing as the normal trading profit and loss account, only that you have column for what different department. Okay, so we have prepared that departmental trading profit and loss account for the year ended. So we have those two departments stated in the question, departments A and B. This for debits, department B A and B. This for what credit. And let's start. Remember in our trading profit and loss, what normally started with is what? Opening what? Stock. So we are opening stock. Now you check there, our opening stock for department A is 150,000. For department B is what? 100,000. Okay? So the next thing that comes after this is what? Add purchases. So our purchases In the question there is 720,000, and department B is what? 520,000. Okay, so if you add them together, this plus this will give us 870,000, and this will give us 620,000. So we check if there's carried inward, but there is none. Check if there's returned outward. There is none. So let's less our closing stock. Less closing stock. In the question there, closing stock have two departments also, department A and B. Department A is 175,000, while department B is 142,000. Okay, so let's have 25, and this is 4,000. So our credit side is always our check. So we have department 1.5 as 1 million, while department B is 1,250,000. So this is our cost of goods sold. So our sales minus cost of goods sold give us our gross profit. So we have here gross profit carried down. So 1.5 minus 695,000 will give us 805,000. While 1.2, 1,250,000 minus 478,000 give us 772,000. So if you add these two, you're supposed to have 1,500,000. And this is also giving 1,250,000. So 1,500,000, 1,250,000. So gross profit carried down will be brought down here. So I have gross profit brought down. So this is 805,000, and this is 772,000. Okay. So the other things now is to check if we have expenses or income. So now we'll check. Now, what I tell students mostly, whenever you want to start something, is start afresh from a question. Start scrolling down one after the other to see so that you don't skip anyone. So the first thing there is purchases, we have treated that. Another one is rent and rate. So we have rent and rate as expenses. So I have rent and rate. Now we did adjustment for this. Remember, rent and rate, department A, look at it, 25,000 for department A, department B, 25,000. So I have 25,000 and 25,000. The next one is commission. So I have commission. So I just have to check there. For commission department A, actually it is 25,000. Okay. So the next one is insurance. Insurance. So insurance, we did adjustment also 2525. So come here, right? 25 and 25. The next one is advertising. Advertising. We did adjustment also department A and B, 10,000. So write 10,000 here, 10,000 here. So the next one is salaries and wages. Salaries and wages. Salaries and wages. We did adjustment also. That was the one we claimed. So department A is 150,000. While department B is 100,000. And the next one is depreciation. Okay, depreciation. Depreciation is 17,500 and 17,500. Got it there. Right. The next one, admin and general expenses. Admin and general expenses. 25,000. So I have 25,000 5,000. Okay. So now if you check in the question there, you will see discount received. We did adjustment also. Discount received is an income. So it comes here, discount received. So say discount received for department A is 72,000, while department B is 52,000. Okay. So when you add this, it will give us 877,000, and department B it will give us 824,000. So this side is bigger than this, so we are having a net profit. Okay, so we are having a net profit. So this department A column subtracts this expenditure. The balance we are having will be 617,000. So that when we add, it will give us 877,000. And also, department B column subtract the expenditure. Balance we're having is 619,000. So that when we add, we'll have 824,000. Okay? So that is our departmental trading profit or loss account. So check in the next video. Let's check the next question. Stay tuned. Welcome to the last question of this WIAC 2020. Next information was extracted from the books of Okere Manufacturing Company for the year ended 31st December 2016. Okay, and they gave us stock, raw materials, finished goods, work in progress, the amounts there, which is carriage inward of raw materials, purchase of raw materials, royalties, plant and machinery, factory expenses, factory power rent, insurance, this kind of allowed carried out what? Salesman salaries, office, stationery. Now, additional information, they say closing stock as at 31st 2016, raw materials, finished goods, work in progress, and they say rent paid in advance, insurance, office, stationery, and depreciation. You are required to prepare manufacturing trading profit or loss account for the year ended 31st. This question is on manufacturing account. Okay. Now, if you want to have an in-depth knowledge on manufacturing account, check in my YouTube channel, The King's Tutor. Okay, you have an in-depth from the scratch. Okay, now let's solve this. Let's go into this proper. Now, from the question there, they say we should prepare only manufacturing trading profit or loss account. Okay, so the first thing I always advise students, you will do the adjustment. So the name of the owner is Okere Manufacturing Company. Okay, so adjustment. So the first adjustment will have closing stock for raw material, which note with RN. For raw materials, it is 30,420. Okay, for finished goods, it is 7,200. And for work in progress, it is 1,680. Okay, the other one is rent. You say rent paid in advance. Okay, now let's do this. Now, also to have an in-depth knowledge on adjustment, I have a topic on that in my YouTube channel. Okay, check that. Okay, so we have rent paid in advance. Now we have the one in a question there. The amount that was paid is 2,400. The one in the question there. Now less the one in advance. Less the one they paid in advance. Okay? The one they paid in advance is 550. So 240, because once it is prepaid with less. So 24 minus 150, 550, we have 1,850. Okay? So move to the next one, which is insurance outstanding. So we have insurance, we have amounts paid, we have the one that was paid for 3,000 before the additional information. Now they say it's outstanding, it means accrued. So we are going to add, accrued is added, while prepaid is less. So we add outstanding. Outstanding of 600. So what do we have? 3,600. Okay, the next one is office stationery accrued. So IV, we say office stationery. Now I said amount paid for the office stationery, the question there is 4,300. Now they said it is accrued, so we are adding. Add accrued. Accrued is 700. So 40 plus 700 is 5,000. Okay. Now the last one for the additional information, they say depreciation. Depreciation on plant and machinery. Depreciation on plant and machinery. They said it's 10% on cost. Now if you check the question there, we have plant and machinery. Now the first one that was that have a value there is the one in the cost that have a bracket in it. It is what? It is the actual cost. Why the one at the right hand side is not valid? But they said it should be on cost. So our 10% will not be 10 over 100 times 50,000 is, what is this? 50,000 US dollars. So 10% of 50,000 will give us 5,000. So this 5,000 is the depreciation. Okay, so that is the adjustment. Now let's move to the manufacturing account proper. Okay, so write manufacturing accounts. Okay, manufacturing, trading, profit, okay, or loss account. For the year ended of raw materials. Let's use RN as abbreviation. So in the question, the opening stock of raw materials is 61,450. This is in US dollars. Okay. So the next thing is add purchases. Purchases is given the question there. So it said add purchases of raw materials. Okay. So the purchases there is 42,360. So 61,450 plus that will give us 103,810. Okay. So the next one is add carriage inward. Carriage inward of raw materials. Okay. Carriage inward of raw materials. So from the question, our carriage inward is 650. So when we add up, we have 104,460. Okay. So this is cost of raw materials available. So less closing stock of raw material, that's the next thing, since there was no return outwards. R is 4. So we say less closing stock. Closing stock for raw material, look at it here, 30,420. 30,420. So we have 74,040. And this is our cost of raw material consumed. Okay. Now for manufacturing account, after all this, we add all direct cost. Okay. Now, one of the direct costs we have there is wages. Okay. So wages there is 14,150. 14,150. Another one is royalties. Royalties is 1,040. Okay. So we check if there's another direct cost. If there is none, we add up this plus this plus this. It was 0. This is 4. 4. Okay, this is 13. That is 3. This is 2. This is 9. This is 8. That is 89,230. So this amount is what we call our prime cost. Prime cost, summation of all direct cost. Okay, prime cost. That is this amount. So the next one is our factory overhead. Okay, so the factory overhead. Now, our factory overhead are those indirect expenses. Okay, so the factory overhead comprises of our factory expenses. So our factory expenses. Okay, factory expenses has 11,430. Another one, factory power. These are indirect expenses. Factory power at 6,050 naira, $50. Okay, so another one, another indirect expenses under the factory overhead is our depreciation. Remember, in this depreciation of plant and machinery is an indirect expenses that comes under factory overhead. Okay, so the depreciation of plant and machinery. So we have depreciation on plant and machinery, which is how much? 5,000. Okay, so if we add up, I think there is no other indirect expenses. So we add up, we'll have 111,710. Okay, 710. So the other thing we should add, we should inform that is our work in progress. Work in progress refers to partly finished goods. Okay, so opening stock of work in progress. So we check our opening stock of work in progress is 3,140. So 3,140. So if we add up that, we have 114,850. So another one is less closing stock of work in progress. The closing stock of work in progress is this, and it's 1,680. So if you less that from that, you have 113,170. So this is what we now call cost of production. This is what is now called what? Cost of what? Production. So the cost of production amount is posted here. Also, cost of production as $113,170. So that we have our final as $113,170. Okay, so this is the cost of production. That's the manufacturing. Now let's move to the trading profit. Okay, so I would want to use this part. So check our adjustments. This is rent, this is insurance, this office stationery. You can write this down. I want to clean here so that I can continue from trading. It is remaining opening stock of finished goods, closing stock, adds cost of production, and all that. Okay, stay tuned. So let's prepare the trading profit or loss part. So the next thing we do is our opening. Remember, had it been there is this space here, we'll continue down. Okay, so if you have space, you don't need to cut it. So we are opening stock of finished goods. This is finished goods. In our question there, our opening stock of finished goods is 84,650. 84,650 in dollars. Okay, so remember our trading profit or loss. Instead of now adding purchases, it is cost of production because this was produced by us. So I've add cost of production. So our cost of production is 113,170. Okay, so if you add up, you have 197,820. Okay, so less our closing stock of finished goods. So closing stock of finished goods, our closing stock of finished goods is 7,200. Now question there. Okay, so if you less that, we have 190,620. Okay, so on the credit side we can have our sales. Our sales given in the question there is $282,400. Okay, so the sales minus the cost of goods sold will give us our gross profit. Gross profit carried out. So this minus this will give us gross profit, which is given as 101,780. So that if you add this, you have 292,400. So this will also give you 292,400. So the gross profit is brought down here. So our gross profit brought down as 101,780. Okay, so all our expenses will be in this part. So from our question, the first expenses we have here is rent. Remember, we did adjustment for all this rent. Okay, that was what was there before I cleaned it. I asked you to write it down. So our rent, the adjustment, we did the 1,850, not the one that was given in the question. We adjusted it. Okay, so because they said rent was paid in advance. So insurance. So the rent is at the note. Rent is at the note 2 of our adjustment. Okay, while insurance is at the note 3 of our adjustment, and it is what 3,600. Okay, another one is discount allowed. Discount allowed was not adjusted, so we'll just write what is in the question. So discount allowed is 1,430. Another one is carriage outward. Carriage outward, which is 610. Another one is salesman salaries. Salesman salaries, which is 41,200. Another one is office stationery. Now, office stationery was adjusted. That is our note. That's our note 4. Office stationery was adjusted. So we have 5,000 is the adjusted amount. Okay? So I think that is all the expenses. So there is no other income. So our total here should be 101,780. Okay? So when you add up this, it is lesser than our income. So we'll have what? The net profit. The net profit. So all this is supposed to have the same balance. So the net profit will be our income subtract our expenses. So what will be here is $48,090. So that is our manufacturing trading profit and loss account. Okay, so that is WAEC 2020 section A question. This section A or B. Okay, it is the section B question, in which they are giving 5 questions, I think, to answer 3. Okay, so we prepared all that WAEC 2020. Okay, thank you for purchasing this. Thank you for staying up to this period. Thank you for listening, watching. I wish you the best of luck in every exam you're preparing for in accounting. Okay, we have also other video for other series in all calculation, either in economics or mathematics. Okay, just call the number showing on your screen, or also visit our YouTube channel to see other videos. But because you purchased this, I want to give you a bonus. Our other videos relating to accounting that I've done before, that is not necessary for this, I'll upload it there. You'll see that after this, after now, you will see the videos. Okay, so just watch, learn, and I wish you success in your exams and in all endeavors. Thank you very much. You can recommend. Remember, I said we also are available for public speaking. I'm also an academic coach, educational consultant, a home tutor. Okay, so if you want anything related to education, don't fail to alert us. Okay, see you. Enjoy the rest of the video. Stay tuned. Welcome to my channel today. This is a King's Tutor. Okay, if this is the first time I'm joining us, kindly like, comment, share this video. Okay, so today we want to see a question on the bank reconciliation statement. Now we have seen the introduction of bank reconciliation statement. We've seen the method of preparing bank reconciliation statement. Now let's see a question relating to that. Now the question said, on 31st March 2015, this card will show the debit balance of 2,000. His bank statement showed the balance of 2,270. On comparison, the following were found. A. Checks drawn amounting to 1,500 had not been presented for payment. The standing order of 600 to a club was not taken into consideration. Bank charges of 50 were entered in the bank statement only. A dividend of 300 naira was paid directly into the bank and not recorded in the cash book. Checks for 1,000 naira were entered into the cash book and paid to the bank, but had not been cleared and thus not credited. F. A customer voluntarily paid 120 directly into the bank without notifying the firm. Required. Prepare the bank reconciliation statement using A. Only the bank reconciliation. B. Adjusted cash book method. So we have to use the two methods. Now, if you have not seen the method or the introduction, check in the link in my YouTube channel at the King's Tutor. Okay, check in the description below. You will see the link for both of them. Now let's start preparing this. Now the first one is to prepare only the bank reconciliation statement. That's the first method. Okay. Now in doing that, we have to decide which are we starting from. Are we starting with balance as per cash book or balance as per bank statement? Okay. So let's start with balance as per cash book. They've already given us the cash book balance to be what? 2,000. Okay. So we'll start from here. I'll say balance as per cash book. Now the amount is 2,000. Now move to add. Now the first item now is a check drawn amounting to 1,500 had not been presented for payment. It means that what they paid this money, but it has not been presented as at when they received the bank statement. So we have to add unpresented check. So whenever you hear a check has not been presented, it means unpresented check. So we have unpresented check. So which is how much? 1,500. Okay. The next one, it said the standing order of 600 to a club was not taken into consideration. Now standing order is to be less, so let's leave a space. Okay, it means they gave the bank order to pay some bills. Okay, so it means they've not deducted it from the cash book. We gave all those explanations in our previous video. Check that. So we have less standing order. In our format, standing order is supposed to be reduced. So we have 600. The reason I leave a space so that in case there are other things I'm supposed to add. Okay. So the next one, it's bank charges of 50 were entered in the bank statement only. The bank made their collected their charges, so it has not been deducted from the cash book. We are also lessening bank charges. So we have what here? Bank charges of what? 50. The next one, it said a dividend of 300 naira was paid directly into the bank and not recorded with cash book. A dividend of 300, it means they received money. Okay, it has entered into the bank, but it is not yet in the cash book. So we have to what? Add it in the cash book. So that is why dividend is added. So we have dividend. How much is it? 300. Okay. The next one, it said checks for 1,000 were entered into the cash book and paid to the bank, but had not been cleared and thus not what? Credited. So a check for 1,000 had been entered in the cash book. That means they've received the money in the cash book, they paid into the bank had not credited them. So it means that's what? An uncredited check. So uncredited check is to also be reduced. Uncredited check. So uncredited check here is 1,000. Now the last one said a customer Bolaji paid 120 directly into the bank without notifying the firm. When a customer pays the money without telling the firm, it means it was a credit transfer. And we also add what? Credit transfer. Credit transfer. How much is it? 120. Okay, so that's all. So let's add up. So 15 plus 300 plus 120 is supposed to give us 5 plus 3 8 plus 1920. So 1920 plus 2000 will give us 3920. Okay, so let's add all these ones to the lesson also. This will give us 1650. So we are lessening this. So this minus this is 12 minus 5 will give us 7. We have 8 here. 8 minus 6 is 2. While 3 minus 1 is 2. So we have 2,270. So this 2,270 is what is known as balance as per bank statement. Balance as per what? Bank statement. Okay? So whenever you get to this point, check what you have here should be the same with what was given in the question. So it shows that we are correct. That actually the cash book and the bank statement were supposed to have the same balance. But because of these reasons given, that is why they don't have the same balance. So your final answer should be the same with what was given in the question as a bank statement. Okay, so that's the first method, preparation of only bank reconciliation. Now let's prepare the adjusted cash book. Let's prepare the second one. So the second one is adjusted cash book. So say I. Now prepare adjusted cash book. Okay, so the adjusted cash book is just like writing the cash book up to date. So the same way, already have the debit balance of the cash book. So bring it here as balance brought forward 2,000. Okay, so we start also. It said check drawn amounting to 15 had not been presented for payment. Now, the rule of this part is that unpresented check and uncredited check do not come here. Okay, they are addressed under. So we also have a standing order of 600 to a club was not taken into consideration. So a standing order is to be reduced, to be less. So it's on the credit side. Since it has not been recorded here, it only affected the bank statement. So standing order is what? 600. The next one says bank charges of 15 naira were entered in the bank statement only. Also, bank charges. Bank charges of 15 naira. Okay. The next one says a dividend of 300 naira was paid directly into the bank and not recorded in the cash book. So dividend is the money that they receive. So it has not recorded in the cash book. So write a dividend of what? 300. The next one says checks for 1,000 are entered into the cash book and paid to the bank, but are not been cleared and thus not credited. So this is uncredited check. I said it does not come here. It comes afterwards. So we also have said a customer Bola paid 120 directly into the bank without notifying the firm. I said that before. It's what? Credit transfer. So credit transfer will also be here. So what is being added to the cash book is what is debited, and what is deducted from the cash book is what? Credited. Okay. So I have credit transfer. How much is it? That is 120. So we'll find the difference now. Looking at it, the debit is greater than the credit. So the debit side will have 2,420. Okay, and this should also be 2,420. So we have a balance called balance carried down. Okay, the balance carried down, that's the difference between this and this. So this is 650. Now 2,420 minus 650 will give us, using my calculator, 2,420 minus 650. I have 1,770. 1,770. Okay, so we'll now prepare the bank reconciliation. So our bank reconciliation as at 31st March 2015. Okay, remember in this one now, what will appear there is only the balance as per adjusted and unpresented and uncredited check. So we'll start with balance as per adjusted cash book. Okay, so the amount, this balance that was carried out here, we brought down 1770. So that is the balance we write here, coming from the adjusted cash book. So the next one is add unpresented check. The unpresented check, we'll set it here as what? 15. So if we add this to 15, you will have 3,270. So we'll now less uncredited check. Uncredited check here, we've not recorded is 1,000. That was cleared. So 3,270 minus 1,000 will give you 2,270. So this is now balance as per bank statement. Okay, so that is the second method, the adjusted what? Cash book method. So you see, give us the same answer. Whichever one you're asked to prepare, you will not be penalized. But if they specify on which method to use that particular method, but if they are silent, you can use any one. Okay, so that is how to prepare that. Okay, so if you're just joining us, kindly like, comment, share this video, and drop a comment there in any topic you want me to prepare or you want me to take. Okay, thank you very much.